The United States is one of only 2 democratic countries in the world where the executive branch of government requires approval from lawmakers to borrow more money. The other is Denmark. So what is the debt ceiling?
Well, the debt ceiling is the capacity of the United States to borrow money to fund its activities, from the space program to Social Security checks to road building to financing the military. So really the Congress has already voted to expend money, and the debt ceiling is simply a recognition that we're going to borrow the money to cover what Congress has already spent.
The United States Congress has raised the debt ceiling 78 times since 1960. Denmark, incidentally, raised its debt ceiling in 2010, the only time since adding the law in the 1990s. The U.S. Treasury normally wants the debt ceiling raised when it believes it will run out of money to pay the country's outstanding debts. So does that mean that the U.S. spends more than it earns and is effectively bankrupt?
The United States of America is not broke. The federal government is not aligning what it spends with what it's taking in. That could be fixed easily. It could be fixed, for example, if people that make over $100,000 actually pay Social Security taxes. They don't pay anything on that extra, so higher taxes. Or cut back on expenditures, or raise the retirement age on pensioners. All these things, relatively minor fixes, but hard to do politically.
If the U.S. Treasury fails to increase the debt ceiling, then the bonds issued by the U.S. Treasury will lose value. Borrowing costs will get higher as creditors demand higher interest rates. The whole world is watching this closely. A U.S. default will impact other economies, and if those countries start faltering, then they won't be able to afford U.S. goods and services, and that could hit the American export market especially hard. Anand, Naidoo, CCTV, Washington.